The 2026 World Economic Forum was unusually market relevant, generating large fluctuations in asset prices. Despite this, interim forum chair and BlackRock CEO Larry Fink has expressed long-term optimism. How does this match up with broader turmoil and negative headlines? Well, I think the key word here is long-term. In the long term, the driving force of economic development and growth is technology, right? Technology is also the driver of much of the turmoil that we're seeing and the negative headlines. We hear about artificial intelligence and how it can put people out of jobs. There is all this political controversy and geopolitical turmoil, and to some degree that can reconduce to social media, which is a child of the internet, which was the previous technological revolution. Technology changes things, causes turmoil, but then ultimately results in incredible productivity growth and immense improvement in human prosperity and reductions in misery. And so in that sense, I'm very much with Larry Fink. I share his optimism for the long term. The single most important financial takeaway from Davos is that it worked as a real-time policy signal. Speeches moved markets and declarations moved markets. This was a powerful reminder that geopolitics is news about cash flows, news about discount rates. It can really affect economic results at the country level, at the enterprise level, and so ultimately can affect asset prices. Unlike in a normal recession, when stocks fall, investors rush into safe assets. Now you see US stocks, US dollar denominated bonds, and US dollar fall at the same time. This positive correlation across risky and risk-free assets means that we're having some news about macro cash flows. So if you have bad news about cash flows to the whole economy, something that can come from geopolitical news, stocks and bonds fall at the same time. Following the speeches at Davos, we also saw that gold rose dramatically. Gold has risen more than the US dollar has fallen, which is an increase in risk aversion, investors wanting insurance. And CEOs have been expressing relatively weak confidence in revenues and profits and cash flows. If everybody waits and sees, then there's nothing to see, and we're in a recession. Predicting the future of the economy is incredibly hard. And so I would not worry too much about the medium or the long run, because we never know. So this week's market lesson is that geopolitics and policy credibility can move the discount rate as well as cash flow expectations faster than the typical financial market cycles. But investors can still protect themselves against this risk by diversifying. Diversification will protect you both from shocks to a single firm, a single country, to a whole geopolitical bloc. Diversification is always useful to protect investors against all kinds of risks.